Nice trading month in the month of April. Big gains. 68,830 are the hypothetical results from our portfolio calculator. Trading one E-mini. We started trading this setup on April the 12th. Before that, we were trading this setup in the month of April. We traded this March 3rd through April the 11th. And this also made equity peaks. Either way, you're at equity peaks. Either way, you're having a strong month. We're trading 6 micros and not one E-mini on the 200K. So I'm going to show you the live results and compare it to the hypotheticals for this setup for the month of April, taking into account how we changed the portfolio from this setup over to this setup. We only changed one strategy. We traded gap continuation 2019. We changed the stop loss on one strategy and from $700 to $2,000 per E-mini. And let's look at the differences between the live and hypotheticals trading 6 micros instead of one E-mini. And so as we track our live versus hypotheticals in 2022, we had a challenging January the 1st through February the 18th. We paused after February 18th trading. We started trading this setup, and I'll give you the annual results here in a minute. But the live results from March the 1st trading this new setup that is working in this market on the E-mini S&P and E-mini NASDAQ, as well as the micros. Once again, we're trading 6 micros and not one E-mini. So if we piece together March the 3rd through April the 11th, we take 60% of the daily P&Ls in the setup that we were trading there, and then we piece in 60% of the results here. These are the hypotheticals from the portfolio calculator. Once again, 60% of what's in the portfolio calculator, daily P&Ls, because we're trading 6 micros instead of one E-mini. And the hypothetical results from March doing that are 22,735, 36,861, and then the live results are 25,308 and 33,109 in live trading. This is from the brokerage statement. So taken from the brokerage statement, you see the daily P&Ls, and then the sum of that. So in March, we were ahead about $2,600 ahead, and we're about $3,600 behind, $3,700 behind in April. And in April, we tracked pretty well until the last 3 days, and then I made an automation error on the user end, not a technical error. It was my my error, and so nice results. Overall, I'm pretty happy with, we're only $1,100 difference, a lot of trades, a lot of volatility, up 59, 596.75 on the hypotheticals from the sum of the daily P&Ls on the portfolio calculator, summing up the brokerage statements, 58,418. And let's look at the live since the beginning of the year. So we were trading a different portfolio setup in January, beginning of January through February 18th. Like I said, we paused from after February 18th, and we didn't start until March 3rd. And year to date, these are our live results from the brokerage statement, and these are the hypothetical results of what we were trading in all the portfolios combined since the beginning of the year. And like I said, January, February were very challenging. We paused, we regrouped, we took into account what we were trading, and we're happy to be where we are. We're happy to be back at equity peaks. Excess volatility in these markets have been challenging, and it's been hard to trade. Price distortions, constant dip buying. We have a lack of two-sided market and lack of distribution, and so we experienced a two-sided market at the end of April and did really well. The strategies did well that we're trading, the hypotheticals. Right here, you can look at the hypothetical models that we are trading now. Those did well in any type of market environment, even with all the propping up price action in January and February and in March. And it did well with the sharp sell-offs that we saw at the end of April, as you can see here. And it back tests well. This portfolio setup is mainly from 2018 forward. We're at different price levels and different volatility levels from 2018 forward, and trades the NASDAQ, trades the S&P, 10 strategies on the S&P, 15 strategies on the NASDAQ. And so these are the models we're working with. And in this video, I'm showing you the difference between the models in this column right here and the actual trading results from the brokerage statement right here. And we will continue to trade our strengths. Crude oil and gold and soybeans are markets that, we're in an inflationary environment and just massive daily ranges. We've seen over $20,000 daily ranges, massive spikes in margins in those markets, and we have a little more stability and trading knowledge and trading information in the stock indexes, and so we stick with those. And we're happy to be at equity peaks in a market environment where the stock market is down and inflation is high. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.